Welcome to today's program as the World Affairs Council of Greater Houston hosts a conversation with Stephen Trauber. I'm Sandia Bayou, Chief Development Officer here at the World Affairs Council of Greater Houston. It's our hope that you, your families, and your colleagues are doing all well and staying healthy. And today, more than ever, it is important to be tuned in to what happens globally that affects us locally and vice versa. World Affairs Council brings you speakers of that caliber, and Stephen Trauber is one of them. Steve, welcome.
Thank you. It's good to be here. Thanks for the invitation.
Yeah, it's again my absolute pleasure to host you and welcome you. How are you, your family, colleagues doing in this current environment?
You know, we're doing well. Fortunately, my family's doing quite well. Thank you for asking. And my colleagues are doing well. It's obviously stressful when you're working from home for a year, particularly our younger folks who, may be either alone, having recently graduated and having an apartment, maybe they've got a roommate, or even if they're at home and have a family, being there consistently for a year with not a lot of developmental opportunities with regards to interaction with more senior bankers. It's been a challenge. We're facing it. I think everybody's facing it, but hopefully we're seeing the light at the end of the tunnel. We're starting to talk about when we'll come back to work, which is good. And so we look forward to it.
Wonderful. That's indeed. It's always good to have this great update. And like you said, there's a vision at the end of the tunnel that we are getting there. And it's noticeable more traction and people to people, as well as movement physically of vehicles, planes and such. Steve, you have had a very wonderful career, interesting career, great line of accomplishments. If you would please allow me just to highlight some of those to our viewers, they might have not known. So some of your highlights. You joined Citi in 2010 as Vice Chairman and Global Head of Energy and serve on the senior leadership team of Citi's Global Corporate and Investment Bank. You have served as financial advisor to over 600 billion, with a B, of global energy transactions, which include many of the most significant M&A and financing transactions throughout all of the energy sectors. These transactions represent many of the energy industry's largest and most transformative transactions. Additionally, you have worked with and served as a lead financier for many of the industry's IPOs for over 30 years. You previously worked at UBS Investment Bank as a vice chairman of Global Energy. Stephen, congratulations. What accomplishments on your career.
Thank you very much. It's feels like I should be headed toward retirement, but I'm not quite ready. Thank you. I appreciate you highlighting some of those.
Absolutely. As I mentioned earlier, you joined Citi in 2010, where you still remain today. Energy is a very broad topic and of course central to the Houston economy and that of Texas. But first of all, in trying to understand your job, you are an investment advisor, a banker, an energy banker to be specific, among your many responsibilities. Energy investment banking is so highly focused. So I wonder if you could describe for us a little bit more about your exact role as a global energy here at the Citi and what led you to such specialized field.
Sure. Well, maybe we start with the latter part first because
Sure.
It's easy. And it's the reality is the reason I ended up in energy is because I met my wife in Houston. She's a native Houstonian. And I knew if I was going to do this business long term, all of the challenges, the travel, the time commitments, that I needed my wife to be in an environment that she was comfortable with so I could go do my job. And that was Houston. That was her hometown, and her family and friends are here. So after starting my career in New York, ultimately made a change to move back down to Texas. And if you're going to be in Texas, particularly in Houston, you're going to do energy. And so that was the default. And, we've been very fortunate, as you highlighted, a few different firms. And energy's been a great industry. It's still a great industry, and will continue to be a great industry. But it's been a lot of fun. With regard to what I do on a regular basis, I oversee the largest investment banking, corporate banking franchise of any firm. Citi is the largest, most global financial services firm in the world. And as a result, we are in so many different geographic locations that are energy rich. So whether that's Asia, Latin America, Europe, Africa, Canada, we have operations with investment bankers who focus on energy in all of those regions, and all those folks report under me. And we advise our corporate clients. Our corporate clients are those producers, those service companies, those midstream companies, and those downstream companies that work in the energy sector. And we work with them to think about strategic opportunities. And those strategic opportunities may mean acquiring something. It may mean selling something from time to time. And all of that also entails, how do we finance our operations? And that could be bank lending. It could be equity capital markets, raising equity for them. That could be debt coming from, again, either lending or the capital markets. So we try to work with our clients. We try to be there to help think about not only where they are and what the landscape looks like today, but what it might look like in the future, and how they might thrive in that vision for what that future may look like. And so we have, as I mentioned, a lot of bankers that are working underneath me to cover and respond to all of our clients' needs.
Absolutely. It certainly sounds like a very compact day with a lot of moving parts. So absolutely. Your reputation as a visionary is in both energy and the banking sectors is well known and is very well respected. Some years back, Wall Street Journal called you one of the best connected energy bankers in Houston. I suppose you might even call you an oracle. Do you see yourself as a visionary? And what do you think it is that given you such a rare talent for understanding the complex energy markets? And how did you develop your vision throughout your career?
I don't think of myself as a visionary, but on the other hand, to do what I do and to do what those that do these similar things or that work with me, you almost by definition have to be a visionary. You have to think, if you're going to serve your clients, you need to think about and understand where they're positioned within the industry. How do they compete competitively? And candidly, as Wayne Gretzky used to say, where is the puck going? I need to be where the puck is going, not where it is today. So I need to think out. I need to think about what that looks like in the future. And there's in this industry, there are so many variables, whether it be geopolitical, oil prices, supply, demand. There are so many different factors that go into what that future could look like. And candidly, we rarely get it right, but we have to take a view, and we have to understand what the various alternatives might be. And then we have to discuss with our clients, how are they positioned in today's market, and how are they more likely to be positioned in the future market if it's to go a certain way. So as we work with clients, and we get lots of different perspectives, as an investment banker, and particularly as a senior investment banker, I sit in a lot of boardrooms. I sit with the C-suite all the time, and we chat and we talk. We talk about their business. We talk about their competitors. We talk about the landscape, and we talk about where the future might go. And, because of the nature of what I'm doing all the time with all of these clients, I'm able to form a view. I'm able to help form a perspective based on a lot of data. It's not just data I have or that I've thought about myself. I'm utilizing data that I'm picking up from lots of different, very well-connected and strong leaders in the energy sector on a global basis. And utilizing that information, we can form views. And we bounce views off each other all the time internally. We think about that. We challenge each other. And then when we're talking to our clients, we try to help them see the world as we see it, or they help us see it the way they see it. And we have honest and open debates about that. And that over, a 30+ year career, you pick up a lot of information, and you think about things in a lot of different ways.
Absolutely. Thank you. And to the audience, please use the Q&A tab to submit questions that I can go ahead and ask on your behalf. Again, Q&A tab in the bottom of your screen. Between 2014 to 2016, the world economy experienced the biggest drop in oil prices in modern history, thanks in part to the US shale oil production. Then by 2018, the energy markets were seeing some stabilization. And then barely 2 years later, COVID crisis hit. This has been most volatile period for energy markets since World War II. We all know the tragic stories of company after company shutting down, sharing the losses, world market volatility. In doing some research for this discussion, I came across actually a headline of Houston Business Journal, which read, "Is investment banking a hazard, a health hazard?" So first of all, how do you do it? You do keep your head about you, particularly as an energy market expert, and in terms of the economy, how would you characterize these times that we are living through?
Well, I think you hit the nail on the head. It has been one of the most volatile times, certainly in my career, and as you indicated, since World War II. When you look back over decades of information, you see that we typically have a downturn in the sector every 8 to 9 years, and they last somewhere between 18 and 22 months. This one's felt like it's been a 5-year downturn, notwithstanding the slight period in 17, 18 that had a little bit of strength. It was taken away real quick, and then all of a sudden COVID came through, and thousands of jobs have been lost, which is tragic in this industry. And part of that, candidly, had to do with the shale revolution. It was a great thing for the United States. It was a great thing for jobs and for a lot of companies, but it got ahead of itself. A lot of capital poured into the shale revolution, and from private equity, from the capital markets, and it caused activity and actions that might not otherwise have occurred if there wasn't so much capital available. And people were paying acquisition prices for opportunities that were probably too much. And at the end of the day, when things did slow down, it became known that returns being generated in the sector weren't above people's cost of capital. And all of a sudden, the energy investors stopped investing in the sector, which is whenever you stop capital flows, you're going to have problems. And that's candidly what happened in part of this period. Obviously, COVID didn't help, and the slowdown in demand. If you're not driving to work and you're not driving on vacations, and if you're not flying planes, a lot of demand and industrial output is slowed down. That's all commodity. That's all commodity demand. That's all oil and gas demand. That slowed down dramatically in a period where we had a lot of production ongoing. So we had, you saw a year ago, for a day we had negative oil prices, but effectively we had $20, $25 oil prices for a long time, and nobody makes money in those areas. So, the good news is, notwithstanding we're still in COVID, as I mentioned earlier, there's a light at the end of the tunnel. Commodity prices, oil prices were 65, they're back down to 60. We're actually thinking that oil prices may move toward the $70 range by middle of the year or third quarter, as we do come out of this, and as people do start going back to work, and as people do start flying again. And so the future, I think, for energy continues to be bright, notwithstanding, I'm sure we'll get to some of the energy transition impact that's having in renewables, et cetera. But oil and gas is a commodity that is used everywhere in the world. It will continue to be the major source of energy supply for a long time to come. And we need energy, and we need the jobs. We need capital to flow. We need to support these companies. What I do think, though, is that we have way too many companies that are too small. And I think we'll go through a period of consolidation where these companies can come together. They can take out costs. Unfortunately, what that means is there will be some more job losses. But I think for the greater good, at the end of the day, we need these companies to thrive. And to thrive, they need to make money. To make money, they need to be bigger, have a lower cost of capital, and be more efficient. So I think we still have some restructuring of the industries that we need to go through. But I do think when we come out of this, and we are starting to come out of it, and we're starting to consolidate, that this sector will continue to thrive, and it will come back, and investors will come back to the sector.
Absolutely. That's great to know that there's a positive outlook. And you mentioned the price of oil. For us here in Houston, it's really indicator of so many things that we really follow that every day. You probably follow it to every couple hours what the price is. But for us, certainly it's a huge indicator and marker. A little bit more on kind of staying on the COVID-19 crisis. Again, as you were saying also today, we still continue with the grapple with the impact on pandemic, and we're certainly a different place than we were a year ago. What we just say is maybe you can speak to how Citi in particular was first impacted by the start of the crisis, and how did that happen, how it respond?
Yeah, it's interesting. As I mentioned earlier, Citi is the most global financial services firm in the world, and we have a very large presence in Asia and a very large presence in China. And as you know, that's where this began. So we started getting signs of this early days. And when we follow the whole origin of the COVID, it was Asia to Europe to North America, and we were seeing impacts with our people. And so first and foremost, Citi wants to take care of its people. It needs to take care of its people. It's the lifeblood of what we do. And so we had to take a lot of precautions. We had to shut down offices. We had to send people home, and that progressed, as I mentioned, from the Eastern Hemisphere to the Western Hemisphere. And today, we still, for most of the world, we're still at home, working from home. And secondly, after we secured and looked after the safety of our people, we had our clients we had to deal with, and we had a lot of stress in the system on a global basis. And a lot of companies needed capital. They saw demand fall. They saw their profitability, their volumes falling. and we had a rush for capital across all sectors. You can imagine airlines. Nobody's flying. We need capital. We need to support our operations. We can't just shut down the whole operation. Energy companies, industrial companies, you name it, across the board, everybody needed capital all of a sudden. There was a huge rush on all the banks to help put capital into the hands of these companies to keep them functioning. And fortunately, because of past sins of the financial system, there's been a lot of corrections made to the financial system, and banks today are stronger than they've ever been. And the banks, including Citi, were able to step up and provide that capital that was needed for our clients. And then the capital markets, the debt capital markets started to open up, and we were able to term some of that bank debt out to the debt capital markets, and the equity markets started to open thereafter, and capital started to flow once we kind of got through early stages of COVID, and people started to understand what this meant. And it was kind of a series of things. I'm happy to say that while we're still back at work, we're already, as I again mentioned earlier, we're starting to talk about timelines for coming back to work. Our clients are thriving. We got record highs in the stock markets. Most of our clients are doing quite well. And so, all the things we were able to put in, the safety nets, if you will, early days in COVID, supported the economy, supported what we were doing. And fortunately, we're now preparing for the exit out of COVID and getting back to normal business, hopefully over the course of the next several months.
Absolutely. You almost answered my question before I last next question. Again, still kind of, we cannot not talk about COVID, and I'm sorry we keep going back, but that is really, it was a year that we had to pivot, and as we see has resulted in much of new innovation. We've gone to directions we never expected in 2019, and we know the vaccination is on track, and definitely it's sending very strong signals of confidence for businesses and population in general. So how do you feel that? Do you feel that the vaccination program happening around the world right now will play a significant role in outlook? I'm sure you agree also that the vaccination is really.
As the various pharmaceuticals, Moderna and Pfizer and now Johnson & Johnson have come out, and others around the world, you can see the market reacting. You can see the market strengthening, the market providing some, positivity around the ability to get it out. Obviously, there was concern as to how fast you could roll it out. The effectiveness was thought to be known, which was quite high. And, how fast can you get it out? Obviously, with Johnson & Johnson out now with one shot and providing a lot more, I can tell you here in Houston, in May, it's going to, we hope to be able to get it out to anybody who needs it in May. And that's, those are historic speeds at which we were able to get a vaccine out. And kudos to everybody, particularly the pharmaceuticals, who worked to be able to get that out, and to the governments who kind of fast tracked it, and everybody, all the folks that work to be able to get that to the locations, because that's, getting it around the world to everybody is difficult, as you know. It's a logistical nightmare, but it's happening, and we're starting now. It started off slowly. It's picked up in its speed. And now, I'm hearing more and more younger people who have been able to get the vaccine now, been able to find it someplace. And so it's really kind of starting to spread throughout the community. And that's great. And that's exactly what we need to be able to get everybody back to work and to feel safe at the end of the day. Because at the end of the day, we need folks feeling safe. They need to feel confident that they can be safe. So we can get to whatever the new normality will be, we can get there. I do worry a tad about, other future strains. And are we going to have to identify drugs that attack these future strains? I'm hopeful that this won't nearly be as bad as people think it could be. I think that's probably in the minority, not the majority. But we know we have lots of strains out there. Interesting, since we're talking from Houston. Houston is the only city in the world that has every known strain that exists. How that happened, I'm not sure, but we seem to be at the epicenter of having every strain. And I'm hopeful that the pharmaceuticals will stay ahead of it, and that people will get vaccinated. And until that time, a public message saying we should be wearing our masks, we should be social distancing, because that's the only way we're going to really kind of put this to an end. So until we've eradicated, we should continue to take the safety precautions.
Yeah, completely agreed, because ultimately we're all looking for the same outcome. We want to get better. We just need to almost there, just hold it, and then we can really enjoy double the benefits that they might be, what they look like at this time. Just looking back at you as your role, and Stephen, of February, March of 2020, and now we are here in March of 2021. How did your priorities shift from 2020 to 2021? Again, that huge year of pivot that just took place and shook us all up.
Well, like I'm sure everybody on this Zoom, first and foremost, I need to be attentive to my family. I needed to make sure that they were safe, that we were safe. And, I had a COVID scare once upon, in the middle of that, thinking, I wasn't feeling so well. And my wife put me in a bedroom by myself for 2 days until I could go get tested. Unfortunately, I didn't have it. But, I could feel what that could feel like for families. If you go isolated for 7 days, I was only isolated for 2 days. And, it gets to be very lonely. And fortunately, I've got phones and I can do things on emails and things like that. But I can imagine families who had to go through that. So stage one was obviously attentiveness to the family. Stage two was, making sure that we were serving our clients. And we had lots of companies come to us for billions and billions of dollars of capital that they needed. We need to get that through the system. We need to get that approved. We need to get that capital out to them so that they can make sure that they can continue their operations. And now, a year later, we got oil prices like we talked about earlier at very strong levels, at levels that companies can make real returns and generate real cash flow. Companies are talking about strategic opportunities and strategic activity. Yes. Do we still have some companies that are going through restructuring? Do we have some companies that still may go into bankruptcy? Yes, we absolutely do. Those were the companies that were levered to begin with that we came into this COVID with. But more companies are coming out of restructurings, and those that have been able to survive and thrive are thriving more now with these higher oil prices. So they're talking about the things we used to talk about pre-COVID. Where do we go? What's the future look like? How do we attract investor attention? How do we get our valuations up? How do we grow our businesses? And that's great. And those are the priorities we like being involved in. And those are the things that we're actually starting to see now, which was not the case a year ago. It was all about survival, keeping my company afloat, making sure it had the capital that it needed to stay afloat. And that's what we were doing a year ago.
Absolutely. One of the questions coming in, if I may read it, kind of shifting away from the energy sector and more broadly in your role as financier, particularly here in Houston. Ray is asking, what do you see as some of the most critical current global challenges and also opportunities?
Well, look, we all read the papers. We all hear a bunch of them. There's several challenges, right? We live in a very, very large world where, you can start at lots of things, but let's start with climate change because that's a topic everywhere. And certainly in the middle of the energy sector, it's a target for people that are coming after climate change and putting a lot of pressure on energy companies to clean up their act with regards to CO2 emissions and green gas emissions, et cetera. And so, that we have to address and that we are addressing. And, we have a new CEO at Citi, Jane Fraser, the first female executive of a large financial institution. So we're proud of that. And she recently on March 1st put out some commentary about what we're going to do about our carbon footprint and shrinking that and going to a net zero. But she also talked about what we're going to do for those sectors that we do business in that are emitters of greenhouse gases and what we're going to do to kind of help get them in line and try to put goals around them as well and work with them. But we do need to work with them. We can't just shut them down. They need capital, they need support, and they know there's pressure on them from investors to do the same. So climate change is clearly one. There's a lot of capital being thrown at it right now, whether it be in the world of renewables and hydrogen in lots of areas to help clean that up. And those are in the energy areas. Every sector is going through that. Right. And how do I create a sustainable supply chain, et cetera. So it's a global challenge and it's something that we'll be talking about for decades to come for sure. Racial equity, a major challenge here in our own country, and a major challenge in the world. I'm proud to say I've got a black son and a foster son. I'm married to a Mexican woman. And we see it, we feel it all the time. So I've spent a lot of time, my personal time, and candidly, some of my money in attacking some of those challenges. And we need to do a better job. I happen to be, in Houston, the home of George Floyd. And so we saw it firsthand. We experienced it, the rallies, the protests, all the activity that went in around that particular situation and incident. But there have been many of those. And, there's things we can do better. There's things we can do better as individuals. There's things we can do better as corporations and as a society. we need to be doing better. And I'm actually very glad that there's more attention being put to that, and people are trying to do more. And I just hope that drumbeat doesn't stop, because we do need to be doing more. Poverty, again, poverty is a major global issue, and needs to be challenged. Public health, similar. There's some just clear overlap and correlations between a lot of these factors, between poverty and public health. But these are all global challenges. Water supply is another major challenge to lots of communities here in the U.S. and a lot of communities, but around the world even more so. And so these are things that we need to attack. We need to address as a society, as governments, as individuals. And these issues aren't going away. Certainly not in my lifetime. And there's things we need to continue to improve upon and continue to work toward a better, global society.
Absolutely. One of the viewers, you mentioned some of the changes and pivots, and Lori's saying, I understand that the Citi building in New York City uses cogeneration and steam for its own needs. How does energy capital market view distributed generations?
Look, we have to go this way. I mean, we did a major upgrade to our facility in New York, and we did a lot of things that were going to shrink our footprint and the emissions that we had. And we're looking through it, like I said earlier, we all need to look at our supply chains and how we improve upon and use vendors that are improving upon their carbon footprint. But when it comes to all forms of energy, I think everybody is looking for ways to be able to do it in a cleaner basis. Hydrocarbons, as I mentioned, is going to be around for a long time, but doesn't mean that we're not going to have an increasing supply of other forms of energy, where the combined mix will continue to lower that carbon emission. And I'm hopeful that, I know I'm sitting in boardrooms and with CEOs all the time. We talk about this constantly. There's constant pressure from investors for them to be doing more. And we talk about what they can do and what they're going to be challenged to do. But that it's coming forward. There was a large cry about this in Europe, and, American companies for a while kind of got a free hall pass. That pressure is now here in the U.S. and it's by the largest investor, BlackRock, Fidelity, T. Rowe. They're getting a lot of pressure not to invest in these companies that aren't making improvements in these things. So very happy to see it. We all need to pay attention to it. We all need to improve individually. Like I said, we need to improve, but companies need to look at their own businesses and see what they can do to improve. Wonderful.
Thank you, Stephen. And good to see that you are actually leading by example and incorporating some of those initiatives, like I said, in New York and other places.
Yeah, look, in addition to what was mentioned, we're spending hundreds of billions of dollars in helping fund clients in a lot of these initiatives as well. So we're at the forefront. It's something that our C-suite and our board take very, very seriously, and will continue to take seriously. I can tell you, in the energy sector, as a person responsible for running the global energy business, I feel the pressures, right? I need to be in front of our clients talking about what we can be doing better, because I feel the pressure from the top. Because if they want us to continue to fund them and continue to do business with them, they need to improve their acts, and they are. I'm not suggesting they're not. They certainly are, but we need to all be getting better.
Absolutely. Veronica writes, many experts say that we are in a global credit crunch now as a result of the pandemic. A credit crunch occurs when there's a lack of funds available in the credit market, and for many reasons, making it difficult for borrowers to obtain financing. Do you agree that we are in such a condition today, and what are your thoughts?
Actually, I would argue to the opposite. I think there's plenty of capital out there. Banks have banks have never been stronger. The capital markets on the debt side, investment grade debt, there's plenty of capital pouring in. There's huge liquidity that's been put in by the government, right? That's in our society, that's in our economy, and more to come with the recent $1.9 trillion of funding that will come into the economy. The leveraged finance markets have probably never been stronger. Rates are at near all-time lows. So, I've not seen any evidence that we are in a capital crunch, that companies can't access capital. Now, there are going to be some companies that, because of their own credit worthiness, have struggled to get it. But with regards to overall sectors and availability of capital, it's there, and one could say, I might even say, there's probably too much capital out there. There's a lot of capital in society today, in the financial markets.
Thank you. We very good live stream here about questions coming in. Again, thank you, your audience. So some of them are shorter, some are a bit longer questions. So we'll tackle as many as we can with a given time frame. So if we don't get to you, just please know that we simply didn't get to you because they were respectful of everybody's time. Lynn is asking, have you seen an improvement in the bankruptcy rate of oil and gas companies with Citi and the rest of the industries globally and locally?
Look, obviously, with low oil prices and low levels of activity, it thrust a number of upstream companies and oil field service companies into bankruptcy. These are starting to come out. Obviously, with higher oil prices and therefore strong cash flows, that provides the ability to pay down debt. If companies were on the verge of bankruptcy, they may be held out because they're now able to generate more cash flow because of oil prices. So, it's clearly the frequency and the rate of bankruptcy has slowed. Companies are emerging with much stronger balance sheets out of bankruptcy and looking to be active. So my expectation is we'll continue to see companies that have been levered and haven't found a way to deleverage. But I do think that both because capital markets are open, as I mentioned, because oil prices and gas prices are stronger, and because candidly you have a acquisition market now that is strong because there is availability of capital, that companies that need to sell assets in order to pay down debt can do so. So we're seeing the A&D market, which is the acquisition and divestiture markets of properties, becoming more active. It was relatively dead last year, because commodity prices were low, so nobody wanted to sell an asset in a low commodity prices. Second of all, the capital markets were somewhat challenged in the middle of the very beginning of COVID. All of that has been rectified. All of those have opened up, and now companies are able to sell assets again to help pay down debt. So I do think there's lots of avenues to prevent bankruptcies, and so we'll see a lot fewer of them on a go-forward basis, provided we, maintain a reasonable oil price.
Absolutely. And a little bit of a continuation on that discussion, a very short question, might not be such a short answer, but do you see a lot of consolidation in energy industry in 2021, or is it more 2022?
No, we saw a lot, it picked up a lot in 2020. I do see a bunch coming in 2021, and I think it will continue into 2022. We have, as I highlighted earlier, we have a lot of hundreds and hundreds of new companies that were created over the last 10 to 15 years because of shale revolution, right? Many of these companies are too small and aren't efficient enough, and their cost of capital is too high to earn an economic return. And as a result, these companies need to be bigger. They need to drive costs out. They need to be more efficient. And they need to drive their cost of capital down. The best and easiest way to do that is through consolidation. So I think everybody's looking at consolidation. If you're a small company, you're trying to get bigger to draw attention to bigger companies ultimately. If you're a middle-sized company, if you want to survive, you're trying to find somebody you can buy and get bigger so that you can survive. Today, there are fewer and fewer energy investors in the world. And to draw their attention, you need to be big, you need to be liquid, you need to generate free cash flow, and you need to generate economic returns. And in my world, for most companies, that means you got to be a company of scale. You got to be driving your business very efficiently, and you've got to have a cost of capital in which you can achieve that economic return. So I think we're here. I can tell you, I sit in C-suites and boardrooms all the time, daily practically, and that's a topic of conversation with everybody. Everybody's looking for an opportunity. Everybody's looking to get bigger, more efficient, and I think we'll continue to see it. There are obstacles to consolidation, clearly social issues. Everybody wants to be that acquirer. Nobody really wants to be that acquiree. And so that creates obstacles to getting deals done. But I think we'll continue to work through that. And I think there'll be increasing investor pressures to get companies to be bigger. And so that'll force some consolidation as well.
Absolutely. A little bit jumping different subject about future of banking. Jesse asks, what does the future of banking look like, particularly in terms of digital revolution?
Well, there's no doubt we are going through a major revolution in what we call fintech and digitalization. You can now do most of your banking, without going into branches. The branch is almost an outdated vehicle. Very few people go into branches. I think people that have grown up going into branches still feel comfortable going in and talking to somebody about their money. But the reality is most everything you can do, most of us, I'd wager, do most of their banking right online. Just yesterday, I transferred money. online. People pay, with ATM cards. They're not paying, they're rarely exchanging dollars anymore. And all of this is digitization. It's also, being able to just be able to look at your pupils and know who you are when you sign in. The speed at which you can open a bank account, the speed at which you can transact is all getting faster. And, I think that'll continue to evolve. I mean, there's billions and billions of dollars going into fintech and trying to improve upon all of these systems and the digital aspects of the business. Tremendous amount of information. I think one of the things about digitalization is the amount of information we now have at our fingertips, and accumulating it is one thing. Being able to analyze it is a whole nother thing. And once it's analyzed, knowing what to do with it is a whole third step. And we're just in the infancy stage and being able to kind of understand what all this data and how to use it. And that'll continue to be worked through. There's, hundreds of thousands of people that's their job to kind of figure out. And we'll continue to see the banking system evolve on a global basis.
Absolutely. As I mentioned earlier in our discussion about you leading such a large team and very geographically spread team, and this is relationship to team and team leadership. On the topic of teams leadership, you're known for placing a premium on developing your team and those you work with. How important is teamwork for you, and how do you develop your team? In your opinion, what are the most qualities best for a leader, a good manager, and what are some things that you think leaders, managers seem to get wrong?
I'm glad you highlighted that, because teamwork is critical. Business schools have now for decades been teaching teamwork. I subscribe to the theory that the whole is greater than the sum of the parts, and you need to work. There's synergies with teams. There's synergies with diverse teams, and I place a huge element in having people that will be team players. I was a team athlete. Every sport I played was team oriented, and I place when I'm interviewing folks, people who have played team sports, people who can demonstrate that ability to work in teams. Because at the end of the day, it's really not about your individual performance. While we want excellent performance from you, it's what can you contribute to that team. And so we love to say we like to check our egos at the door, and we come in and we work as a team, and everybody's in the boat and rowing. And whether that means I'm sitting there having to run to a copy room to get, because that's what the team needs, or whether somebody else has to do something else, we're all trying to get a goal done, and we're trying to serve our clients. And so teamwork's critical. In the same vein, developing our people, as you highlighted, is critical. And that's one of the things I think COVID is really kind of hampered here. The ability for people when they're working at home has been a challenge. And I feel that strain, I feel that stress on our people every day. They're not able to sit around in rooms, and just the natural osmosis that goes on when you're collaborating together in conference rooms or walking into somebody's office doesn't exist today. And so, we continue to hope for the day where we're back and we can develop face-to-face, but continuing to find ways to develop your people is so important. It really is at the heart of what we do. We, at the end of the day, our assets are our people. And so we need to have the best people. We look to recruit the best people. We look for people that want to be developed, right? Not everybody thinks that they need development. Everybody needs development. I need development. Everybody continues to need development to get better. And we want people that know when they come in, they want to be developed, want to grow, they want to be challenged, be taken out of their comfort zones. And we try to do that. When it comes to leadership, there's so many facets that I think go into leadership. Leaders have to set the example. They got to lead by example. You can't just watch people do it. You got to be an active, participant. This is not a spectator sport. You got to roll up your sleeves. You have to communicate well. You've got to set expectations, and those expectations oftentimes need to feel like they're stretch goals. They can't be easy goals to achieve, and yet you need to make sure that the team has the ability and knowledge and feel like they can actually achieve those if working together. I also think it's about others. It's not about you. I think the individual who puts themselves first is not a real leader. You got to put others around you first. Your team needs to know that you're looking out for them, that you've got their back, that you're going to support them, and as we mentioned earlier, that you're going to help develop them. And these are all facets, I think, that go into leadership. I candidly think the one area that often falls short is putting others first. I think there's so many leaders that think they're leaders, that have a title that would suggest they're a leader, but they're putting themselves first. Their ego all of a sudden grows as you get this leadership role, and you forget that A, how you got there, B, somebody probably helped you along the way to help develop you and put you first. And that once you get to that position, you have a sense of obligation, sense of responsibility to also develop those along the way. And so, those are all things that I think about, from where I sit in the office, and to try to think about it on a daily basis.
Wonderful. Very, very well said, Steve. Lori continues saying, thank you for such a meaningful and insightful discussion and for touching on some very critical issues. Is there a book in your future, perhaps an autobiography?
I doubt it. But look, I'm happy to say I'm 59. I still got some years left. I still love what I do in this industry. I still love working with clients. I still love working with people and in teams, as we talked about. I sometimes, find myself thinking about what am I going to do in the future, and I haven't found anything better than what I'm doing today. So I'm going to keep doing it. I'm sure at some point, just given the nature of investment banking, the travel and the hours and the stress that goes with that, and someday I'll wake up and not be able to do it at the same speed that I can do it. And then at that point, I'll think about what lies ahead. But I will say one of the benefits for me of COVID is that I've been able to stay at home and not travel as much. Interestingly enough, I probably have done more client meetings in the last year than I've done in any year of my career, because I can do them, without traveling. I don't have to drive out to see a client and then have to drive back in. I don't have to go, through the airport and sit on planes for hours a day. And all those times where I know occupied and out of touch, I'm in touch. And so, my ability to stay connected with my clients has been great. And yet I haven't had to travel, and the wear and tear hasn't been able to be home, able to spend a little bit more time with my family. So there have been a few benefits that have stemmed from the result of COVID. But I can tell you, I'm looking forward to going back to the office, and I know our folks are looking forward to going back to the office. And I'm sure most people that are on today that aren't back are probably looking forward to it as well.
Absolutely. Same thing for our friends and members of our organization. Again, that networking is very much missed, gratefully appreciated. And just as you and Citi, we as an organization also are looking for healthy ways to return and make sure we continue that opportunity and give everybody a chance to see each other. We have a question coming in from Victor. I would like to hear Stephen's and Citi's take on how China might be competing as a lender of choice to projects in developing countries, and what strategies Citi is using to maintain a lender of choice status vis-a-vis the Chinese aggressive lending practice.
Well, look, there's a lot of talk, especially in the last 24 hours, given Biden's interactions with the Chinese, and candidly, it goes back to under President Trump and the interactions we had there as well. There's no doubt that China, the U.S., and many other countries have to coexist in the world, and we have to find ways to not only work together, which we do on a daily basis. There are always going to be points of tension. Right? They're looking out for their country and their people. We're looking out for ours and our people. So there's always going to be points of tension. And when it comes specifically to the banking world, they're very aggressive. We're very aggressive. There's no doubt. I mean, a lot of complaints you hear in the foreign countries that Americans are too aggressive, right? That's candidly in our blood. It's the way that Americans are. It's a capitalistic society. It creates competition. It creates aggressiveness to get ahead. I do think, China's obviously different. They have a different political regime and a different economic regime. But I do think there's opportunities to work very well together. We do work. We do a lot of business in China and throughout Asia. We do a lot of business, and they do obviously a lot here. And, I think that we need to learn. They're going to be a good competitor. They're going to be a good competitor in the banking world. They're going to be a good competitor in lots of industries. And we have to learn. And candidly, that competition is what makes us better. And it makes them better. And all we're asking for, I think, is a level playing field, right? We don't want cheating. We don't want unscrupulous activities. We don't want, cyber cheating. There's a lot of things that lots of countries can get involved with that, we want a level playing field. We want a fair and legally enforced level playing field. And I think Americans will shine through in that case.
Absolutely. Thank you. We have a next question. Is it enough for energy companies to generate positive free cash flow, or do they also need to show a minimum cash flow return before capital markets will come back to the energy industry?
Well, you have to start with free cash flow because that's where, you can't return anything without the free cash flow. So absolutely, first and foremost, generating free cash flow. And free cash flow is defined as after capital expenditures, right? So, once you have free cash flow, you only have a few things you can do with it. You can pay down your debt. And if you're over leveraged, you should do that. You can let it sit on the balance sheet, but excess capital on the balance sheet it's not a good return. Or you can return it to shareholders through dividends and share repurchases. So they're absolutely linked. But you're absolutely right. Companies that just generate free cash flow and sits on the balance sheet, that is going to be positive, and you're going to face investor pressure. There needs to be return in the energy sector. Investors would like to see some of that return. Investors have provided billions and billions, hundreds of billions of dollars of capital, through the shale revolution. And now, now that that capital is spent, now that a lot of these basins are maturing, and now that capital expenditures are shrinking and the acquisition capital is shrinking, investors want to see that capital returned. And for those companies that need additional capital because they've returned a lot of capital, if you're good stewards of that capital, generating good returns, I am sure investors will allow you to, issue equity again to them. We've done that. We've been in the equity markets this year. We were in the equity markets last year. And the equity investor is going to be discriminating as to who gets that capital back. Mm-hmm. And it's those companies that demonstrate that they have good management teams with good assets and can generate good returns. And so, yes, the answer is yes to the question in a long-winded way. You have to be able to return capital too for investors to really value you highly.
Wonderful, thank you. Paresh is asking, when we say the energy capital of the world, it often references Houston as a geographic capital for the energy industry. As Houston is pivoting to lead the global energy transition, how can we also position ourselves as the financial energy capital to fund the net zero energy future? How can we drive local innovation and issuances of sustainable and transition capital solutions, including green, sustainable, and transition labeled bonds and credit facilities? I know it's very involved.
No, I understand the question. I put it every, and there's no doubt that this course that we're on of energy transition is a multi-decade transition, and maybe beyond that. And it's going to take trillions of dollars of capital. And I'm willing to wager that a lot of the future forms of energy are going to be developed through either technologies we don't have today or forms of energy that we don't even know about today. And it's going to be developed by entrepreneurs. It's how the energy industry got built. And it will continue to increase other forms of energy away from hydrocarbon, what I'd call, cleaner energy, if you will. And that's good. But that's going to take lots of capital, and banks are going to be there to put that up, provided that companies are good stewards of that, generating returns and all the things I talked about in terms of cash flow, et cetera. Green bonds, Citi's a leader in green bonds. We're doing that, and investors want to invest in green bonds because they want to incentivize companies to set KPIs that look at their various indicators to reducing carbon footprints and developing, sustainable ways of doing business. So I do think Houston can be that. We have tremendous amount of energy knowledge. We have tremendous amount of engineering and R&D capabilities. And I do think we can be that future energy transition capital of the world. There are a lot of cities vying for it, right? There's a lot of entrepreneurship and a lot of capital coming out of clean tech firms on the West Coast. There's, there's very few regions in the U.S. vying to be a leader in energy transition. We have to take a proactive approach at it. We can't have our heads in the sand. Organizations like the Greater Houston Partnership are doing great things in trying to attract more of those companies here. The Icon here, which I'm very proud of because it's a Rice-funded, Rice-owned facility, is trying to do more in terms of provide not only space, but networks of people, capital, to help generate more ideas in this area, and at the point of funding a lot of this. A lot of the SPACs that we're doing, the SPACs have grown, and there's over 500 SPACs, and we can get into that if you want. It's a not overly complicated new financial product, but a lot of these SPACs are funding green energy. Its capital is being provided by financial investors that are funding green energy, early stage green energy, meaning later stage VC, early stage, where a lot of these guys aren't even producing profits yet. They might have revenues, they may not have revenues, but they got a great business plan and one that's believed to be viable. And so a lot of capital is coming into this, and Houston absolutely has the ability, and candidly should be at the forefront of being able to not only fund it, but develop these companies and have a lot of these companies ultimately housed and domiciled here in Houston, create thousands and hundreds of thousands of jobs for the future.
Absolutely. I'm going to shift a little bit more gears from our kind of student and participation of you as a person in other parts of Houston, how you participate. You mentioned your work with Greater Houston Partnership, your state and Mayor's Economic Development Task Force, but you're also, with your wife, very active in philanthropy here in Houston, from Children's Museum. Why do you think that kind of participation also is important to you?
You know, I tell people this all the time. I'm blessed. I worked hard to get to where I am, but I'm blessed that I have a job. I make a good income. I have a healthy family, and I'm proud to be able to give back. I like supporting various organizations in the community that particularly make Houston a vibrant city. I live in this community. I like supporting that are close to me, whether that be my former alma mater, Rice University, or my business school at Northwestern. And various other things that I've done in my life, and they're vast, but there's always a linkage to something that I care about there, or that my family cares about. Whether it be children's organizations, we're big goers of the arts. We like to support the arts organizations, and House here sharing the Memorial Hermann Gala this year. The Memorial Hermann Hospital System here in Houston is a pillar in the community. It serves so many people. And it's a not-for-profit hospital, and that means it serves a lot of people that can't necessarily afford the healthcare system, which means a lot of diversity there. And I'm proud to be able to help support that in our fundraising there as well. So there's many things that I think contribute to making Houston a great city. And any way that I can give back, and Candy, my wife gives back just as much as I do. We serve on boards. We write checks. We roll up our sleeves, and not just sit on the boards. We actually do things. These organizations, and I'm really proud to say my kids are getting involved well. My kids are getting very involved in these things. They've seen what we've done over the years, and they want to give back, and they're doing some of that as well. So I think it's important for all of us to give back where we can. Not all of us can give back the same. Yes. We all have hopefully the ability to do things that can be, or we know people that can give back. Find those. I encourage everybody. I encourage the people that work for me. Find those organizations you care about. Find those things that touch you in some way, and reach out and help. It doesn't have to be $1. If you can't afford to fund it yourself, you may know somebody, you may have a client that can be supportive, or you may be able to, go to food banks and maybe able to work at the food banks, and a number of things that we've done over the years. So, I'm a strong advocate of that, and we continue to do so today.
Absolutely. You probably know, Stephen, that we are also very, passionate about education. Education is what we do, and we educate from middle school to high school, universities, and till the individual is ready and willing and want to be part of what we do. And in light of this conversation, I have reached out to some of the high school students, a part of our Student World Affairs Councils, and they have submitted some questions for me to ask you. So next questions are coming from our student. Julie is asking that you are involved in so many initiatives. How do you allocate, and how do you find proper time to allocate that time? I mean, there are only 24 hours in a day.
It's a common theme around my house, because sometimes my family feels like they get the short end of that. Look, it comes down to prioritization, finding those things you care about. And I've done a lot of things. I've coached my kids in sports, for years when I was, a vice president in this job, and we traveled every weekend. But it was important to me. And these organizations I'm involved with now are very important to me. I can tell you, I can't make every single board meeting, and that bothers me, because I want to be at every board meeting, but my business calls on me, my family calls on me. But I think as many organizations said, we'd rather have part of you and know that you care and be able to help where you can than not help at all. So, I try to identify those areas that are most precious to me, and really be involved. And then there's others that I might just help financially, because I think it's important. I just don't have the time, as you highlighted, to be able to give my time. So there's multiple ways, as I indicated, to give. Or I might find somebody in my own team that I think this organization is important, and get a member of my team involved in it, so that they do get, not only what Citi has to offer, but some contribution to their organization as well.
Well said. Faith is asking, at what point in your life did you really know what you wanted to do with your career?
I'm still trying to figure it out. No, I think, it was interesting. I was probably in business school. And even then I wasn't positive. I started out, I came out of Rice University not knowing exactly what I wanted to do. And I interviewed in a lot of jobs. And I ended up going to work for what is now Accenture. Back then it was Anderson Consulting. But I also knew in the back of my head, I wanted to actually, even before that, I thought I was going to be a doctor. I started off as pre-med. And I actually, in between my junior and senior year in college, I actually worked for Dr. Denton Cooley, one of the world's renowned heart surgeons, doing heart surgery every single day in his operating room. And, I think that alone convinced me that I probably wasn't meant for medicine. I just couldn't see myself doing that every day. Now, that's one specialized form of medicine. But what I did like was analysis and quantitative analysis and analytical thinking. And so I kind of drew myself, therefore, to the business world. And then I went to business school and identified there. I started interviewing both for consulting and investment banking jobs, but knew quickly that the financial side of me was the thing that probably I was best equipped to do, and the thing I enjoyed most. It just drew me to investment banking. And then, once I was in investment banking, as I mentioned, I ultimately moved to Houston. I started my career in New York, moved to Houston. If you're going to be in Houston, you're going to be doing energy. And so, that was kind of my decision to come to Houston. But, once you get into it, you throw yourself into it. This job and this industry is fabulous. I know there's a lot of people out there, and probably maybe a lot of high school kids out there that think, I don't know if I want to go into investment banking. There's no better job coming out of college in investment banking, because you're going to be working with great, smart people, that you're going to be working with C-suites. You're going to be working with executives and companies, helping them think through strategic issues. It doesn't matter what industry you end up going to in investment banking. You're going to be working on the financial side, helping them raise capital, helping them fund their business or fund acquisitions. You learn so much in such a short period of time. And yes, the hours are tough. The hours are long. But what you get after those 2 or 3 years as being an analyst right out of undergrad is like 5 or 6 years of school. I mean, I can tell you, I look back over my 31 years career and look where people who have worked with me in the past have gone. I got CEOs of energy companies that are out there. I've got people who are leading private equity firms, CFOs out there, all because they got such great training early days. So it's a great business still. And I would highly encourage, the audience who, the high school folks asking questions to really think about investing in a career. You don't have to do it your whole great training right out of school.
Wonderful. I know being respectful of your time, that literally the time is clicking. We're almost at the close the hour. I wanted to see if there are any closing remarks you would like to share with our audience, our students, our members and friends.
No, first of all, I'd like to thank you for having me. It's been an honor to be able to respond to your questions, both about the business world, about banking, and candidly a little bit about my personal life. I enjoy what I do. I love what I do. I love the city of Houston. I love traveling. Love to travel. And, I would say, as it pertains specifically to the energy sector, a lot of people want to bury it. They want to put it away. They want energy transition to take hold. No doubt energy transition, as I talked about, and the things that comprise energy transition and decarbonization and clean energy and all of these things are going to continue to grow and require lots of capital. And I hope, and I'm spending over half my days these days doing that. But the energy sector as a whole, what we know the energy sector, which is the upstream business and the oil field services and the midstream business and the refining business, is critical to what we do. So many people need what we do. We're sitting here, we got electricity coming through right now. Well, that electricity probably got generated through ultimately and initially natural gas. You got to have natural gas. It's got to come out of the ground. So many of the clothes we wear, everything we do, the lights we turn on, we need hydrocarbons for a long time to come, and energy, other forms of energy will also fill in and will continue to grow. But that's great. That's what makes America great. That's what makes the capital system so great. And again, thank you for having me.
Yeah, again, thank you for your time. Thank you for the powerful message. Thank you for your leadership and participation here in Houston. And we honored that you were able to give at least some of your Friday busy afternoon to us, World Affairs Council of Greater Houston. With that, I wish everybody a fantastic weekend. It's a beautiful weekend here in Houston. Couldn't ask for better weather. So go outside, enjoy, stay healthy, and wishing again everybody a wonderful weekend ahead. With that, we'll see you later. Thank you much.